Nasdaq's up 51. Eddie Ghabour with me now. Okay, you know, Eddie, that I do read your stuff religiously. And you say we haven't seen this kind of market since the 1990s and the dot-com boom. You, sir, are a raging bull, aren't you?
Absolutely, Stuart. And we have been for a few months and continue to get confirmation. Look, in the 90s, it was the internet boom, and now we have the AI boom. And I will argue that the AI boom is going to be much bigger than the internet boom. And it's rare to get opportunities in markets like this that can create a tremendous amount of wealth for investors. And for those that are worried about valuations, I would argue, look back during the internet boom. I think valuations in this cycle will get stretched much more. And we can be aggressive for our clients and make the moves that I share with you and your viewers each week, because when this party ends, and we know it will at some point in time, we will sell just as aggressively as we have bought. But we are going to not fight this trend. We're not going to fight the Fed, and we're going to try to maximize gains for our clients over the next several months.
You also like, big time, Bitcoin. And you're recommending a Bitcoin fund, I think it is, FBTC. You put money into that, right?
Stuart, we bought Bitcoin on the dip yesterday. It's been hard to find dips here in the last couple of months, but it's 10% off of its high. It's kind of been sitting in a range bound, and we think the next move for Bitcoin is going to be higher. So we increased our position there. We have about a 5% position in Bitcoin. We look at crypto as one of the most aggressive assets out there. So as bullish as we are, we would expect crypto to be a leader going into year end. So we like the fact that we got a buying opportunity yesterday.
And Bitcoin is the favored crypto.
For us, the volatility in Bitcoin has really come down substantially. And so we believe by adding Bitcoin to our portfolios, we can actually lower volatility and get something that's not correlated to other assets that we have in our current portfolio construction. So that's why we like Bitcoin. In our opinion, it's a little bit safer than the other cryptos.
Gold keeps hitting record highs. It's still above, we got gold at about $3,800 an ounce. You play it through GLD, I believe. How high, what proportion of your assets are kept in gold at the moment?
So we actually just trimmed a little bit because of how big of a run we've had. We've been between 10 to 20% for clients. We will buy back the 5% that we sold in the coming weeks. We expect to see a little bit of a pullback because, as you know, we try to stay pretty active in our IRA accounts. But gold, in our opinion, is going to continue to have global demand by governments that have no intention of selling. And so I think gold, even though it's up over 40% for our clients this year, we have used it as a supplement to bonds. And we think that trend for gold is going to continue to go up. But right now it's probably overheated, and we took a little off the table, but we still have 10 to 12% for clients.
I do like the way you mentioned in your IRA and 401k accounts, because if you sell at a profit and you're trading, you don't pay capital gains taxes. That's very important.